This is Sean Hyman, head course instructor here at mywealth.com, and I want to start off by pointing out an exciting deal that we've got that you can see in our written version of our blog. We've got it marked off kind of in the middle, but literally if you are a current MyWealth blog subscriber, or if you want to sign up today as well, that's fine. But if you are a MyWealth blog subscriber, you can answer the question of the day, which you'll see in the written version of the blog. Email it in to the email address shown there in that excerpt, and that'll be your name and email will be put into a pool. We'll draw a few names out of that pool to win up to $1,320 of courses from us for free. So don't pass that up. So with that said, let's talk about today's blog. I want to talk to you about how I formulate investment ideas and really kind of let you crawl inside my mind. And I do that in a written blog, and I want to do that here in the video as well, and show you an investment idea that I have rolling around in my head right now and why. So let's go ahead and get started.
Be sure to check out the written blog at www.mywealth.com/blog. And let's talk about how Honda is to benefit from GM Chrysler spinning their wheels. One thing you can count on is the media to report on bad news. It seems like they thrive on it or have a thirst for it. And while many people watch these news events and they'll say, oh, that's horrible, it's terrible, and go on about their day, I tend to look another way and say, who does this help and how can I make money as a result? Because one thing I've learned is that I can't change the actions of a CEO or CFO or a board of a company or anything like that, but I can take advantage of things out there in the market and profit from it, and so can you. So I say Honda and other Asian auto manufacturers, and even some from South Korea like Hyundai, will be helped as GM/Chrysler continue to spin their wheels and possibly go bankrupt. Anytime you don't have the big three, GM, Ford, and Chrysler, from Detroit breathing down your neck, it always helps you to get some lead time in order to gain even more market share. So in other words, while these guys are fumbling around trying to figure out how to cut spending, get things right, get back on track, yeah, Honda's been hurt some too, but they haven't been hurt nearly as bad, and they get this lead time while GM's changing up CEOs and all this kind of stuff and fumbling the ball. They get the lead time to go ahead and tear into more market share, and so that helps them. And and let's see why I say Honda, because there are others, but Honda looks the most technically strong on the charts, even above Toyota right now. And you can check into our investing courses and currency courses and learn more about the fundamental and technical reasons why I would say such. But let's just go here on the chart, and you'll see this stock double topped around 36 or so roughly back about a year ago, continued a downtrend just like GM, Ford, Chrysler, any other pretty much automotive company out there, and downtrended. However, along about December, you have this real panic selling happens right in here. And this is where I believe most likely the bottoms have been formed. And I say most likely because you can never tell for sure, but that's what it looks like from the amount of volume and the huge sell-off in the recovery that we had. So I think it shook out a lot of weak hands, as we call it in trading, right at this point. You'll see it broke a near-term downtrend line as noted by this red line, and we've recently picked up momentum by this green line. Now, there's a lot of companies out there, auto stocks included, that don't look this bullish yet. They haven't broken downtrend lines. They're still in downtrends. They haven't had the first really solid round of up days like Honda has had. And so that's one reason why I think that this will come from these levels over the next year or two or three up here back to its old highs. If it does that, it'll be a 50% gain or so on my money. And so while I draw it straight up, I don't project that the price will actually go straight up. I'm just telling you where I think that it'll go over the next 1, 2 to 3 years. So and I can't emphatically say that this won't come down and retest lows either, back in its December lows. And so this is why I buy with cash. I don't trade on margin. All my investing will be done with cash. That way, if it does pull back, that's fine. It doesn't, won't cause me to get a margin call or anything in my stock account. And I can ride this thing through and wait a year or two or three, and I will more than likely be up on my money to the tune of 50% on that investment based off of some of these concepts that we're sharing here today. Another added blessing is the recent fall of the Japanese yen. So this is another reason why I think that Honda has some wind in its back. And in this case, it's mainly the yen exchange rate compared to the U.S. dollar, since that's where their hedges lie and where their largest market share is. So let's take a look at the USD/JPY chart on the next slide. Now, currencies are traded in pairs, and you'll notice that there's a downtrend that we've had for quite some time right through here that appears to bottom in December roughly, goes sideways. So what did we have during that time? We had the dollar falling against a strengthening yen. And so the dollar, even though the dollar was getting strong in general this past year, it was not against the yen. The yen was still ahead of the race. It's like the yen was in first place and the dollar was in second place, and most other currencies were in third, fourth, fifth, sixth, seventh place. And so that's why the dollar had a leg up on most currencies, yet it did not against the yen. And so you went through the sideways range. It bottomed in about February. And then you'll see the pair coming up here recently on yen weakness, and that's key because back in December to February you had the dollar to the yen exchange rate at about 87 to 88. So if I give you $1, you give me 87, 88 yen. Okay, that's not that great, even though it sounds like a lot. Yen, there's a lot of them. But more recently, the exchange rate is so much more favorable that if I give you $1, you give me 98 to 99 yen. That starts to become a lot better bargain. And so these Japanese exporters, be it Sony, Panasonic, any of those type guys, Hitachi, all the way to these Japanese auto manufacturers, they all really need a weak yen so that a stronger dollar buys this weaker yen and appears to make these Japanese products cheaper. So this is something that really is a requirement for these guys to make money, and this is headed in the right direction over the last couple of months. So that's something I think that'll help them as well. So bottom line, weaker yen plus GM/Chrysler troubles equals an edge for Honda especially. That's my little theme and thesis right there. You can learn more about our investing techniques in our investing course. You can also learn more about our charting techniques, the way that I derive things from these charts in our currency course. And I want to make that emphasis because whether or not you trade in the currency market or not, the charting techniques that you learn in the currency market you can use in any other market. It's the exact same. So I'd encourage you to take that course. It's actually even the lesser expensive of the 3 courses as well at $19.99. But whatever you do, don't wait. Get in a course, get educated at www.mywealth.com. Thanks so much.